My mission is simple, to make you money. I'm here to level the playing field for all investors. There's always a bull market somewhere, and I promise to help you find it. Mad Money starts now. Hey, I'm Cramer. Welcome to Mad Money. Welcome to Cramerica. I'll be one of my friends. I'm just trying to make a little money. My job is not just to entertain, but to educate and teach you. So call me at 1-800-743-CNBC or tweet me at Jim Cramer. We can go for months without back-to-back good days around here. Months where the market just guts and gaffs you. And then you get divine moments like this one, where the market rallied and rallied hard for a second day in a row. This time, the Dow gaining 272 points, S&P jumping 0.83%, NASDAQ rising a more subdued 0.69%. And you remember why you bothered with stocks in the first place. Moments like these usually come when so many people have given up that there's almost no one left to sell. Bull markets are built on the backs of skeptics who reluctantly turn positive. They become the tinder, the fuel for the next move higher. And that's where we are right now, confounding those who thought the Fed or the yield curve were the only things that mattered. The earnings season has revealed all these bearish strategists to be intellectually naked. Sell, sell, sell. Stuck in a rut devoid of rigor, about to be washed away by the positive tide. And I love it. The Bears know this. Bears are still going to have their day, and probably even Monday when we find out the denouement, the First Republic story, where we kind of expect something is going to happen that's big this weekend, maybe even tonight. And I think it's going to be seized by the FDIC, and you'll come in, and the stock will be a zero. Although it might reopen next week as someone else's bank and put a new sign on the door if they can find a buyer. But I don't think there'll be a ton of negative pin action because the collapse of First Republic could mark the end of the mini banking crisis that started in March. The banks might even rally as the air is finally cleared. Some of them tried to rally today. Now, the Bears are still going to cling to the negative story. That's what they do for a living. They're going to try to scare you out of stocks as they did for so long. I think getting this entire saga behind us, though, will actually be very good for the market. Not bad. Hey, Tuesday we get some big guns. In the morning we hear from Pfizer, a stock with a terrible COVID hangover. I don't even know what they can say other than they're buying Seagen for $43 billion. That's the old Seattle Genetics, yes, because we used to profile it all the time, to build out an anti-cancer franchise. Pfizer needs it because the street thinks that this company is a has-been now that the pandemic's in the rearview mirror. I think it has a ton of good stuff in the pipeline. And as chief spokesperson for the American Migraine Foundation, I wonder, when will Pfizer get behind Nurtec in a big way? That's the migraine wonder drug they got from Biohaven. It's a life changer, and I don't think they're doing anything with it. Then we get results from three fantastic industries. These are Cummins for engines, Eaton for a lot of different kinds of electrics, and Illinois Toolwork for a vast panoply of different industrial things. Now, we may think of them as old-fashioned metal benders. That's how the street does. But you know what? No, these days, they're digitized and specialized. And I'll tell you, I think all three could have good stories to tell about their businesses, but they're also going to give you bad stories to tell about the business environment. After the close, we get earnings from three crucial positions for the charitable trust. We get Ford, AMD, and Starbucks, three stocks that we cover closely for the CNBC Investing Club. Now, we're looking for an upside surprise from Ford, a middling story from AMD, and a steady-as-she-goes story from Starbucks, where we hope to hear from CEO Laxman Narasimhan, who, frankly, has been remarkably quiet since taking over. We need to hear from Laxman. We need to know his vision. We need to know where the company's going. He's got to meet the press and the analysts and tell us what the heck is happening. Uber reports, too, and I think it's going to be positive as the company's been frantic about getting profitable. It could spur the stock higher. Wednesday, we start the day with two household names, CVS and Yum Brands, the latter being the parent for KFC, Pizza Hut, and Taco Bell. Now, I am concerned about CVS. That's another company with a terrible COVID hangover. Can't seem to get it behind them. But I think Yum will give us another upside surprise. It's almost like clockwork with that earnings machine. Then that afternoon, we have the big bad Fed meeting, and everybody's going to be worried about that. It's another woe-is-me situation. I can already hear the bear narrative, by the way. You mean they're going to tighten after the First Republic debacle? Are they crazy? Isn't that scary? No, they're not crazy. I'm going to let the bears in for a secret right now. When you're in this phase of the market, all you want is what's supposed to happen. No surprises. And that's what I think we'll get from the Fed. No surprises. I'm not being glib here. We need Jay Powell to say he's been raising rates consistently, and that's what he'll keep doing if the situation warrants. But otherwise, he's willing to wait a bit to see what the next rate hike does to the economy. I think Powell's about to win here. He's engineered a soft landing for everything but wages and rents, at least so far. I do see wage growth becoming anemic, although I expect rents to remain intractable, no fault of the Feds. It's tough for home builders to borrow money now that the Silicon Valley Bank disaster has made the regionals, who really does most of the lending, afraid to lend. But hey, you can't get everything right on the way to a soft landing after a banking crisis. We just want the Fed to avoid a crash. We don't want an airline party, for heaven's sake. Thursday's got some incredibly interesting companies reporting in the morning. We hear from Kellogg, which is splitting itself up, and I think that's going to create a ton of value. You got to watch that one. I actually would go further. I'd say I would get in ahead of the quarter because the packaged food plays are hot, hot, hot. More on that later. Then I like PG&E. That's the growth utility from California run by Patty Poppy. We've watched this one creep up and up as the market digests the divestiture of the shares owned by the Fire Victim Trust. That was the entity that received a large ownership position in PG&E as compensation for damages caused by the giant California wildfires, and it's slowly but surely selling off its position, which is why, as every bit it gets closer to finishing, the stock goes higher. Then, after the closed DoorDash reports, I expect for them to show a profit as they pivoted from the red to the black after the market got sick of money-losing companies and stopped funding them. Ooh, critical and also controversial. We got Coinbase, the combative crypto exchange that's in a brutal battle with the SEC. Well, what constitutes a security? If Bitcoin, for example, is a security, the SEC could regulate it, something that Coinbase and its followers simply won't stand for. I predict fireworks as the company recently sued the SEC, trying to force it to rule in the matter. Hey, maybe that's the dumbest thing I've ever darn seen, because if you're running a publicly traded company, don't antagonize the SEC. They're your regulator, for heaven's sake. What a nightmare. Then we have the most important quarter of the week, and that is from Apple. I believe Apple has a brand new story to tell. People aren't thinking about it enough. It's called sales in India. I believe India will soon reveal itself as the best market in the world, a whole country where everyone wants or has a 5G phone, and I predict that Apple will be the most popular phone among the wealthier masses within the next few years. When you have 1.4 billion people, young people too, you can have an awful lot of buyers. This is a new narrative that will help Apple get off the China treadmill that we're all so sick of. Other than that, this is not a particularly important quarter for these guys. As I said with the Fed, no surprise, and this kind of tape is a good surprise. Finally, on Friday, we have two entertainment companies that I find as entertaining as what they produce: Warner Brothers Discovery and AMC. And I got to tell you, this is, without a doubt, these are two companies that are the most challenged companies when it comes to balance sheets. Now, I know you're probably bored by balance sheets, but that doesn't mean that these are going to be boring stocks or boring talks. David Zaslav of Warner Brothers and Adam Aron of AMC are they're two of the most compelling CEOs out there. I have no idea how AMC can tell much of a growth story unless Super Mario is still going strong this weekend, maybe. But Warner Brothers, when Comcast reported yesterday, we didn't get that good a feel for the cord cutters. And when you cut the cord, you hurt this company's bottom line. I think it'll be a big issue, as will advertising, because I keep hearing about more and more money leaving TV and going to the web. That said, Zaslav knows the debt must be paid down, and he's a seasoned enough CEO to make it happen. Bottom line, after the last couple days where we could rally on joyous earnings news, next week we're back to hearing constantly about the Fed and how the Fed's going to bring us down, even as we have some very important quarters coming that I think, once again, will surprise to the upside. Smitty, North Carolina. Smitty!
Jimmy Chill.
The Chill's in the house.
Long time, original club member.
Yes, the club rocks, man. We had some good ones this week. What's happening?
Yes, sir. Jimmy, I spoke to you about 3 months ago regarding Constellation Brands possibly walking away from Canopy Growth. And you said to me that you thought we would be fine because it was long-term. My question to you is, I am getting crushed on Canopy. Do you recommend that I buy down?
No, I don't want you to buy down, but I will tell you that Chef Jeff Marks and I talked a lot today. Of course, he's my doppelganger with Charitable Trust. And we don't like the way Constellation Brands trades. And we thought that maybe it is because everyone just says, why did they spend so much money on Canopy? They did do that. Canopy, I don't have a lot of faith in. I do have faith in Constellation Brands. It's a big position for the trust. They had a great quarter. Nobody seemed to care. I don't think that can last long. I think the stock's a buy. I need to go to Alexander in Georgia. Alexander.
Mr. Cramer, it's great to speak with you. Hey,
well,
thanks for your time. and taking my call. I want to gauge your wisdom on a unique publicly traded company doing a roll-up in a fragmented industry. The company is Cal-Maine Foods. What are your thoughts?
Man, that thing is one firecracker. Every time I have looked at that stock, it is either up huge or down huge. I have to tell you, something worries me there. When I see that big a yield, it says to me that there's trouble ahead, but there hasn't been trouble behind. I'm going to stay away. Let's go to Sam in Colorado. Sam!
Jim, how are you?
Good, Sam. How about you?
I am all right. Jim, my question is with regards to Johnson & Johnson's spin out of their consumer health products division. As you know, there's only a handful of companies in the world that have a AAA credit rating. It's better than the U.S. government as it stands today. One of those companies is Johnson & Johnson, and the chief reason for that AAA credit rating is because of the fact that the consumer health products division is what funds the pharmaceutical discovery unit. So my question is if Johnson & Johnson spins out the consumer health products division, will that affect their stability and their credit rating moving forward?
Boy, damn. Sam, that is a great question. Now, J&J's assured me that I should not worry about that, but I, too, have been worried because I love that steady Eddie business. Now, that business has occupied a huge amount of time with the CEO. Therefore, they do think it's going to spin off, and people are going to like it. That group is starting to get better. Consumer packaged goods stocks are hot. That said, I'm not as worried just because what I care about is getting these talc cases behind them. And if that happens, this stock goes to 180 in a heartbeat. Despite the positive steps we took this week, we have to stay focused on the Fed because the bears are going to keep us concentrated on that. And then we also have an onslaught of earnings. Don't forget, Apple is next week. Oh, man, but tonight, fresh off earnings, I'm digging into the state of automation with a real red-hot stock, and that is Rockwell Automation and their top brass. Then there's been a lot of headlines out there about the lithium space recently. You keep asking about them. You know what? I got a real change of heart coming here. And you called in and asked about a stock that I find a bit intriguing that is hot, hot, hot. So I'm turning my homework on the mystery name to see if it could be an under-the-radar way to play the robotic space. So stay with Cramer.
Don't miss a second of Mad Money. Follow @JimCramer on Twitter. Have a question? Tweet Cramer. #MadTweets. Send Jim an email to madmoney@cnbc.com or give us a call at 1-800-743-CNBC. Miss something? Head to madmoney.cnbc.com.